What's up, guys? Ron from Rohde Law, and today we have a really exciting speaker. It's Chad Griffiths. He is a commercial real estate industrial investor based up north in Canada. But we're going to talk about his first investment deal, how he got started, how he got the money, how he sourced the deal, everything. And then finally, we're going to learn about his long-term outlook and his goals as an industrial investor. So welcome to the channel, Chad.
Great to see you again, Ron. I truly do wish we were doing this in person in Dallas.
About 70 degrees and sunny. So yeah, Dallas would definitely be better right now. For people that don't know, Chad Griffiths, huge internet YouTube celebrity. You've got your own YouTube channel where you only talk about industrial real estate. We've known each other now for a couple of years. I mean, I don't remember when we first interacted, but I certainly have been following you in 2020.
And I'd thought about doing a YouTube channel in the past, but was always just too busy. Started in the industrial real estate industry in 2005. And I started as a broker, started investing myself in 2014. Started with just a small prop with one partner. And since then, we've tried to pretty much add a property a year, and our portfolio has grown to be about $25 million and roughly 150,000 square feet worth of industrial property, some flex property in there, some manufacturing property. And it's an asset class that I just absolutely love. I stumbled into it. I didn't know anything about industrial real estate in 2005. So it was this long journey of just learning everything that I could about it, both from a broker perspective and then as an investor. I'd like to say that I have the majority of my net worth directly invested in industrial real estate. So I live, breathe, sleep this. I'm a full-on industrial real estate nerd, and I just love talking about it. So that's kind of the culmination of my journey getting into the industry. And then 2020, when I started the channel, much like yourself, there's very little content out there specific to industrial real estate, as big of an asset class as it is. So I just thought I could share some of the things that I've learned along the way and continue to learn. Like you and I connected because I was just fascinated that there was another person out there talking about industrial real estate, share the same kind of passion. So yeah, that's a long-winded answer to the
No,
question.
that is the full Monty, but I appreciate that insight. I think that for a lot of people, they really suffer from analysis paralysis. And what I talk to a lot of my clients, they're investors, they're starting out, they may be transitioning, maybe from multifamily, maybe residential background. You will be successful, but you just have to pick one thing. And I think you're a perfect testament to that. I think you would be successful in any asset class. You could have done self-storage, you could have done mobile home parks, you could have done office, it doesn't matter, but you must dedicate yourself to learning new things. But you have to dedicate yourself to an asset class to become the expert, because nobody is born knowing these things. Nobody knows how to underwrite or knows the industry. If you're looking for an asset class to start a journey, I think industrial is really, multifamily has so much competition that the margins are very thin. And now people are buying on negative cash flow for the foreseeable future until they can value add. And to me, it's incredibly risky. Industrial is still, it's generally an institutional, regional, private equity play. It's a lot of big players.
Yeah, and you're 100% right on that. I think that there's two things. People have to be dedicated to learning one thing and being very focused on it, but they have to be very passionate about it. It's very difficult to have that enthusiasm to always want to be reading new market reports or going to a new conference or tuning into a podcast just to hear what's happening in trends if you're not really enthusiastic about just learning everything that you can about it. So even 18 years into this, I probably consume more information right now than I actually did when I first started. I still think that I'm scratching the surface of what's potentially out there. So you have to be dedicated to it, and you have to find something that you really enjoy. And for us, it was industrial, but I agree. I think there could have been any number of avenues that we found. I'd be less optimistic right now about the future of office. I think that there could be pain in that market going forward. Retail doesn't really excite me. I think at best case scenario, that's going to be flat. Maybe it ticks up a little bit here or there, or ticks down. But industrial, I think, has such a long runway ahead of it. So I stumbled into it, but I'm very grateful that I did, because I think it could be a great investment vehicle for the foreseeable future.
Yeah, absolutely. And I think to piggyback onto that, do you think you require that same passion if you were a professional LP, or does that only apply to direct CRE owners, to direct asset owners?
Yeah, great question. I think as an LP, you could be more hands off, but in a perfect world, for me, every dollar that I make, I cherish. Like I look at that dollar and be like, this $1 is very important to me. So if I'm going to deploy that dollar, I just want to have the best information I have available to me. And whether that's in an LP, GP, whether that's investing in stock or crypto or whatever it is, I want to know that that dollar is going to work for me. And as an LP, I would just want to know who the team is. The team would probably be just as important as the asset class itself, because I could invest in somebody that does mobile home parks if they've done it for 20 years and they're experts in it. I could invest in that without becoming an expert in mobile home parks if the team is there. If it's a new team and perhaps it's the first or second project that they did, I'll probably personally underwrite that investment and my stake in it a lot more carefully. But in a perfect world, if you're going to invest in something, why not spend the time to really understand exactly what it is? And one in industrial, as you and I both know, industrial is probably the area where there's the most risk of making a catastrophic mistake. For multifamily, you could buy a 20 unit building. If it's in a good market, you're always going to be within that operating band of what market rates are going to be and with what vacancy is. So if everything's renting for $1,500 a month and there's 3% vacancy, providing there's nothing that you hadn't projected, you're going to experience that as well. You're going to experience market rates and you're going to experience market vacancy. You buy an industrial property that was perhaps custom built for a specific manufacturing type, and that tenant leaves down the road. What is the chances of converting that building to make it attractive for the general market as a whole? Well, if there's very specific things in that building, it could cost a considerable amount of money to retrofit it to make it available for the next tenant. There could be significant downtime, so increased vacancy. If it's a single tenant building, you might have just lost 100% of your income until the next tenant comes in. So I think as an LP myself, where I would consider investing in industrial deals as an LP, everything that I've done has just been either LLC or myself in the GP position. If I were to invest in an LP and it was in another market altogether, I still want to understand what that building is, what potential limitations there are, any market concerns. I think that's just being a prudent investor. Could you do it by just being an LP if you've got a really good management team behind you, in front of you, I suppose, and you're confident in their track record and their ability to perform? I think you could probably be a little bit more hands off. But again, going back to me, I look at every single dollar I have is very, very important to me. Well, it's $1, $1,000,000. I cherish, because it takes work. It takes a lot of work to
you
make
got to
those.
think that that's post-tax dollars as well. So brought in more revenue and then paid taxes and sales tax and everything on franchise tax on top of the gross number before I get to what's left over for me. And so, yeah, you really realize how far down the food chain that dollar has to travel.
Well, and there's an opportunity cost to it as well, right? Like right now, you can buy T-bills and make a decent return just off of a T-bill. So there's an opportunity cost in addition to that, being after all the other expenses and taxes you paid to get that dollar.
Yeah, and I think that's a great point. We are real estate investors, but I think that still doesn't detract from we're still stewards of our money. And if a 1 year T-bill is, in the US is 3.9%, I've got to allocate something towards that as just a prudent investor, or shift my expectations for my real estate. So I can't buy expecting a 5% cash on cash if a T-bill that I can put, nearly unlimited amounts with zero work to get me 4%. Like that logic just doesn't make sense. So I need to be buying and expecting higher yields than a 1 year or a 10-year T-bill. So
yeah, it's a great point. And just to even add to that, there's that misconception out there that as a real estate investor, you always need to be buying and selling and being that proverbial character where you're always in action. And I think sometimes not making a decision is actually the right decision. So I'm very bullish on the industrial real estate market in the long term. Short term, unclear right now. I think that there's still some price discovery going on, but I'm a bullish long-term investor, so I'm willing to look at any deal in any market. But that doesn't mean that you have to pull the trigger on anything, because,
That's
like
right.
you said, it's the best decision for you at that individual time might be to do a 1-year T-bill instead of taking risk that you might not be comfortable taking at that time.
That's right. Yeah, one of my friends, Romy Chima, he's got a big, I don't know, $3 or $4 million, 3 or 4 million square feet portfolio in DFW. He said, "You're in this business to make money, right? At the end of the day, we're here to generate return on our time. We've chosen real estate and industrial real estate as that venue, but that doesn't mean that you always have to be buying and selling. So that may mean placing money in other areas to make money." We have a bias towards real estate, but you don't always have to do it. That's going to wrap up part one of this interview. I'm going to break this down into a little bit shorter segments and describe exactly what's in each phase of this interview with Chad, because I think he really has a lot of great information and he has every single step for a beginning investor to learn about industrial and to become an expert like Chad is. So subscribe to this channel and see the next series of installment for this interview with Chad Griffiths. Smash that like button and we'll see you next time.